It really does feel like the UK is starting to turn the corner after what has been 8 years of relative and absolute valuation declines versus other markets. And I think there's a number of reasons. One, investors are just waking up to the fact that it's cheap. Two, we've seen an acceleration of M&A. And again, you sort of touched on Keyword Studios this morning, which is another example. Political headwinds, I think, are abating. There's a little bit more political stability now and looking forward. And so I think people are finally just waking up that actually the UK's got a lot of fantastic companies and they are very cheap compared to other markets. So it's pleasing to see how much the UK market's rallied over the last sort of 6 weeks or so.
Yes, there's a lot of very big dollar-earning international companies in London. There's a lot of domestically focused British companies as well, especially if you cast your net a little bit wider and look at the mid-caps in the 250 as well. Do you differentiate in all your valuation criteria between the ones or your estimation of future growth and share price performance of the international names, which are big international companies, and indeed those domestically focused names?
Yeah, the domestically orientated names have performed far stronger over the last 20, 25 years than the FTSE 100 because the earnings growth is far superior. So yes, usually you'd expect the mid-cap companies to trade on a valuation premium, but that's diminished. And actually, given the economic backdrop in the UK has started to improve somewhat, though we are still in early days of that, valuations look cheap. So yeah, but I think the interesting thing from the FTSE 100 and the large international businesses, which has been talked about a lot of late, is the valuation discrepancies between businesses that are listed on other stock exchanges. So Shell, as an example, trading on 8 times, whereas an equivalent American business would be on 12 times. And so again, I think people are starting to wake up to that opportunity there for those international names on the 100.
Dan, I want to talk about takeovers in a moment, but I want to just dive into the Keyword Studios shares that have opened up now and quickly spiking more than 65%. And this after EQT has said it's in advanced discussions to buy the company. And again, we're talking about a premium here, a huge premium, 70%. So there have been a ton of deals around that has just, again, put the spotlight on the sort of valuations that the UK is trading on. Can you just talk us through the takeover side and how monumental that is for investors in the UK market at this stage?
Yeah, we've seen a marked increase in takeovers in the last 4 or 5 months, and a lot of them have been at very, very significant premiums, not dissimilar to what we're seeing with Keywords and EQT this morning. And it just shows how undervalued UK equities are, and especially at that small and mid-cap end. If an end buyer is willing to pay a 70% premium and they still think, they can get the numbers to add up at that level, it just shows you how cheap UK markets are. And so on one hand, I think it's very positive that we're starting to see this uptick in M&A, this confidence and sort of the markets moving higher on the back of it. Though there is a sort of a slightly troublesome issue in terms of the lack of new companies coming onto the UK market, and actually all of the good companies potentially just sort of being taken over. So I think that de-equitization trend is just something to keep an eye on in the medium term.